Everyone wants the secret investment that will make them rich overnight. Yet, if you look closely at the portfolios of many millionaires, you'll often find something surprisingly ordinary: index funds. So here's my question. What's the wealth mindset behind index investing, and why do so many financially successful people trust something that seems almost boring?
That's a great question, because the biggest misunderstanding about investing is that people think wealth comes from finding the next winner. In reality, wealth usually comes from avoiding the biggest mistakes. Index investing isn't just a financial strategy, it's a psychological strategy. Think about planting a mango tree. You don't dig it up every week to check if it's growing. You water it, protect it, and give it time. Yet many investors treat their money differently. They constantly check prices, react to headlines, and chase whatever everyone is talking about. Ironically, that behavior often costs them more than choosing the wrong investment. The wealthy understand something powerful. Excitement is rarely profitable. Casinos are exciting, lotteries are exciting, viral stocks are exciting, but long-term wealth is usually quiet. Index investing reflects a mindset of humility. You're admitting that predicting tomorrow's market winners is incredibly difficult, even for professionals. Instead of trying to outsmart millions of investors, you choose to own the market itself. That's not giving up, it's understanding probability. One of the biggest enemies of wealth is FOMO, the fear of missing out. Every year, there's a new can't-miss investment. It might be a hot stock, cryptocurrency, or the latest trend dominating social media. Most people jump in after the excitement has already begun. The disciplined investor asks a different question. Will this matter 20 years from now? That single question changes everything. Behavioral finance teaches us that investors often lose money because of loss aversion and herd mentality. We hate losing more than we enjoy winning, so we panic during downturns and become greedy during booms. Ironically, those emotional reactions cause people to buy high and sell low. Index investors try to remove emotion from the equation. They invest consistently whether markets are celebrating or panicking. They're not predicting tomorrow, they're preparing for decades. Compounding is another psychological lesson. People underestimate slow progress because our brains crave immediate rewards. Imagine two friends planting seeds. One keeps digging up his seed to see if it's growing. The other patiently waters his every week. Years later, only one enjoys the shade of a giant tree. Money works much the same way. The wealth mindset isn't about getting rich quickly. It's about becoming the kind of person who can stay patient while everyone else is distracted. Here's something fascinating. Many studies have shown that the biggest advantage successful investors have is in higher intelligence. It's better emotional control. They don't need to be smarter than the market. They simply need to avoid sabotaging themselves. When you embrace index investing, you're really investing in discipline, consistency, and time. You're choosing certainty over ego, patience over excitement, and progress over perfection. And maybe that's the greatest lesson of all. The market doesn't reward the loudest voice in the room. More often than not, it rewards the quiet investor who simply refused to quit.
What a powerful perspective. Wealth isn't just about what you invest in, it's about the mindset you bring to investing. If this conversation challenged the way you think about money, let us know in the comments. Don't forget to like, subscribe, and join us for the next episode as we continue exploring the fascinating psychology of investing. Until next time, invest wisely, stay curious, and keep building a future your future self will thank you for.